Welcome. In this video, we will analyze when will Xcn coin explosion come. Don't forget to subscribe, like, and please watch to the end to understand. When we look at the chart from a broader perspective, we can clearly see the formation of a well-defined descending trend structure. This descending trend indicates that the price has been under downward pressure for an extended period, with each attempt to move higher being met with selling pressure. Within the current technical setup, this trend line is acting as a strong resistance zone. Every time the price approaches this descending trend line, it gets pushed back down by selling pressure, forming new lower lows. Therefore, in order for the market to reverse direction and gain significant upward momentum, this descending trend line must be clearly broken to the upside. Simply piercing the trend line or briefly moving above it will not be sufficient. The price must close decisively above this level and preferably retest it as support to initiate a new upward wave. If the price manages to break this descending trend with strong volume support, it will likely boost investor confidence. This is because such critical trendline breakouts often attract new buyers to the market and accelerate the upward movement of the price. In technical analysis, breaking a descending trend line typically signals the end of the current downtrend and the potential beginning of a new uptrend. So, this breakout wouldn't just result in a short-term move, it could also indicate a medium-term trend reversal. Especially in major trend breakouts like this, there are a few key details that investors should pay attention to. For instance, an increase in trading volume during the breakout is an important factor that supports the reliability of the move. If volume remains low during the breakout, the likelihood of a fakeout increases. However, a volume-backed breakout is generally a strong signal of a sustainable upward trend. In this context, breaking the current descending trend line represents not only a technical resistance breach, but also a psychological threshold. This trendline has symbolized the dominance of sellers for a long time, and once it is breached, the perception will shift to one where selling pressure has weakened and buyers are gaining strength. This can encourage both retail investors and institutional players to take positions. To summarize, the breakout of this clearly defined descending trendline on the chart would represent a major shift in the market structure. If the price surpasses this critical level, it could lead not just to a minor rally, but to a strong trend reversal. Therefore, how the price reacts to this descending trendline in the coming sessions will be one of the most critical areas to watch. But it's important to remember that trends alone aren't enough. Other metrics must also be considered. Stay tuned. When we evaluate the chart from the perspective of Elliott wave theory, it is clearly observable that the current price action is forming within the second wave. As you know, in Elliott wave structures, the second wave follows the first and typically causes the price to pause or retrace for a while. Second waves are often not characterized by sharp declines, but rather by sideways or slightly downward movements. That is exactly what we are experiencing now. The price, instead of a sharp drop after the first wave, is fluctuating within a sideways range and undergoing a phase of horizontal consolidation. By nature, second waves are periods in which the market gathers momentum and builds up energy. Sideways consolidation is common during times when investors are indecisive and buying and selling pressure are relatively balanced. Therefore, minor up and down movements during this period are normal. However, it's important to keep in mind that following this sideways consolidation, the third wave is expected to begin. And the third wave is typically the strongest, most voluminous, and longest of all waves. The real trend movement in the market usually takes place during the third wave. According to Elliott rules, the minimum targets for the third wave are determined using Fibonacci measurements. Typically, the third wave extends 1/618 times the length of the first wave, measured from the beginning to the end of wave 1. In stronger markets, this target can even extend to 272, or in some cases, up to 2/618 Fibonacci levels. Given the current structure, aiming for a minimum 1/618 Fibonacci extension during the third wave appears to be a very reasonable technical expectation. If the market moves in line with this expectation, we could see a significant upside expansion in price. One important point to note here is that the third wave is usually much stronger than the others, both in terms of momentum and trading volume. So when the price enters the third wave, we're not just talking about a small rally. We're potentially looking at a large-scale bullish move. That's why it's essential to patiently monitor this current phase of horizontal consolidation and focus on the moment when the third wave is triggered. Once the second wave is completed and the third begins, it can bring about substantial movements in a short amount of time. In conclusion, according to our current analysis, the price action is in the second wave phase within the framework of Elliott wave theory. This sideways movement is normal and aligns with expectations. If everything proceeds in accordance with the theoretical structure, a minimum 1,618 Fibonacci extension should be targeted in the third wave, with potential for expansion up to the 2,272 level, depending on market strength. This could present a significant bullish opportunity. Therefore, in the coming days, the price action will be critical, especially the timing and direction of the breakout from the current consolidation zone should be closely watched. When we look at the chart from a broader perspective, it's clearly evident that a distinct and notable downtrend structure has formed on the RSI, or Relative Strength Index. This downward trend line directly reflects the weak price momentum that the RSI has been indicating over the past period. The continued pressure on the price and the RSI's movement within a downward channel, in parallel with this pressure, suggests that buyers have remained weak so far, while sellers have had the upper hand. However, it's important to remember a key principle in technical analysis. No trend lasts forever. Especially in oscillators like the RSI, downtrends either lose strength and flatten out over time or experience a breakout, signaling the beginning of a new trend. Therefore, the current descending trend channel in the RSI can be seen as a quiet precursor to a potential trend reversal in the future. Looking at the current chart structure, we can observe that the RSI is moving very close to the descending trend line, occasionally touching it and feeling its resistance. An increase in such touches is often seen as a sign that a breakout may be approaching. If the RSI manages to break this descending trendline with a strong and decisive move to the upside, it will not only signal a shift in the RSI, but also likely trigger a significant change in the price chart as well. That's because trendline breakouts on the RSI often occur slightly ahead of price movement. In other words, when the RSI breaks out of a downtrend, it gives an important early signal that the price may soon follow by changing its current trend and beginning a new upward movement. This is why the RSI's current behavior and its proximity to the descending trend line should be closely monitored as a critical development. Following such a breakout, if the RSI begins to move out of the oversold region and gains upward momentum, it can also positively influence investor sentiment. As selling pressure decreases, new buyers are more likely to enter the market. In this scenario, we can expect the price to initiate a stronger and more sustained uptrend. After trend breakouts in indicators like the RSI, it's common to see increased volume and momentum in price action, which can quickly lead the price to test new resistance levels. It is especially important that the RSI holds above the level at which the breakout occurs. A breakout confirmed not just by a quick wick, but by multiple closes above the trend line, is necessary to validate its strength and reliability. Otherwise, false breakouts, known as fakeouts, can mislead investors. Therefore, closely monitoring volume movements in conjunction with the price chart after the RSI breakout will play a critical role in making more informed decisions. In summary, the current technical setup clearly shows a strong downward pressure on the RSI. However, there is a growing sense that this pressure may be nearing its end. If the RSI breaks above this descending trend line with strength in the coming days, it could be a major signal of a bullish shift in the price chart as well. For that reason, it's essential to monitor both the RSI trendline and the price movements very carefully, as doing so could help identify valuable new opportunities. The RSI must be closely watched. Yes, friends? I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.